Hello and welcome to a new series of accounting podcasts by me, Professor of Accounting. This is episode 1, Control Accounts Ledger Pro-Forma. This is a Pro-Forma ledger for the sales ledger control account, and if just obviously to look at it in terms of finding easy ways of remembering what goes on what side, and obviously what they mean in terms of being on each side. So we've got the debit side first. This is the sales ledger, so we have to remember and recall, we're thinking of debtors when we think of sales ledger, credit sales, so just debtors. So any existing debtors at the start of this period would be the balance BD on the debit side, the large amount. We do have on the credit side the balance BD for a small amount, which I'll mention shortly. Let's just focus on the debit side first. With existing debtors at the top, balance BD, that's the large amount. We've got credit sales. We've got bank in terms of dishonoured checks, and we've got interest charged to debtors. Now, have a think, what do all these three elements linked to the first element, which is balance BD, have in common? Well, credit sales obviously increased debtors. Bank, and in terms of a dishonoured check, it's not bank is as you would think in terms of paying money. It's actually said there as a dishonoured check. So let's just remind ourselves what dishonoured check means. Have a think for a moment. Dishonoured check, if you're not sure, in terms of in the sales control account, this is relating to debtors paying the business money. So debtor will have sent the business a check to make payment. However, the check would have bounced. It wouldn't have cleared. And therefore, in terms of the accounting, a check sent to the business to pay for debtor's account would have entered in the accounts. It would have increased the cash book and decreased the debtor account. So when the business is aware that the check is bounced, it's dishonoured, the debtor account needs to be increased again to show the amount that is still outstanding. So that's why it's on the debit side. And any interest charged to debtors, again, any fines or penalties in some way, interest, obviously for late payments maybe, or anything like that. That again is making debtors, expecting debtors to pay more money at some point. So the three have what they have in common is that this increased debtors. So we can summarise that with an increase in debtors. I mentioned this at the end. On the credit side, I'll come on to the BD as well. If we start at bank and cash, well, that refers to debtors paying the business money, because we can see that from double entry. They have double entry. What entry is made in the bank account or the cash account? Well, if there's an entry being made in this account, because on the credit side there is an entry in the bank or cash account, so that was an increase of an asset. So that means they were receiving money, assets of money. So bank and cash on the credit side here, the sales ledger control account would mean debtors are reducing, they're decreasing. Discounts allowed, just remind ourselves what that is in terms of the phrase. This is a cash discount, an example of a cash discount, a settlement discount, and it's offered to debtors as an incentive to pay early. So discounts are allowed. If we offer this to debtors, they usually accept it. Whoever accepts it, it's classed as discounts allowed. So that is in some way a reduction in how much debtors pay the business. So that is, as we've said, a decrease in debtors. Sales returns, well, that's obviously a debtor who originally bought from us, a previous sale, and has decided not to keep the goods, whether they're faulty, or whether they were the wrong item, or whether they're just not happy with it, or whether for whatever reason it's still goods that have been returned to the business, so the amount owed by the debtor has to reduce because the goods have been returned. Bad debts, this in terms of reducing debtors, well, it would, because the debtor is unable to make payment and has typically they mention this to businesses that they were unable to pay, or in some cases the business, after all efforts have failed, they opt to write off debtors, some debtors as bad debts. Then that is reducing debtors, so it belongs on the credit side of this account. And contra as well, we'll come on to contra with an example shortly, but all of these elements on the credit side there, what these have in common, these will reduce debtors. So the trick there is try and work out with the information you're given, and even in this example, the layout, try and understand why they belong on the side, and just try and rationalize and think about, is this affecting debt? How is it affecting debt? Is it increasing debtors or decreasing debtors? Now, a bit about the balances. I've already said the balance BD large amount is typically, it's showing the amount of debtors that owe the business money at the start of the period. Well, look at the balance CD, the large amount, that's on the credit side. Well, that would follow, because that would then that's the end of this year or a year, so then it would be balance BD debit side. Now the small amount balances, I've got an example shown in a separate podcast, but this relates to, if you think about it, it's the opposite of what the large amount shows. So if the large amount shows existing debtors, then what can happen in some cases is, I'll show you, is that debtors can in some way have a credit balance. And if you think what that means, a credit balance in double entry turns from being an asset, which is what debtors are, into a liability. I know capital is a credit balance as well, but in terms of debtors, instead of debtors owing the business money, which is typically what it is, in some small cases, some debtors, depending on timings of transactions, the business can owe them money. So I'll show you that like I said, in a different podcast, and then that would correspond right to at the end of the year for the balance CD small amount. That element there, balance BD small amount, tends to come up in OCR rather than AQA. So if you're doing AQA and you're revising AQA and you're thinking you've never seen it before, I wouldn't read too much about that. It is good accounting to understand it. It's relative to real accounting, but obviously if you're cramming or looking for some quick tips on revision, then it's mainly applicable to OCR. With contra offsetting, again, I'll show you an example in another podcast soon regarding contra and offsetting and why it belongs there. A little tip about contra and offsetting just now is, don't forget that this, if you remember anything about it, it appears in both control accounts. So it appears here in the sales ledger control account, and it will appear on the debit side, the opposite side to this, in the purchase control account. Again, I'll show you how that works in another podcast. If you want specific help on that, then again, just look in the other videos that I've put on, and you'll see a specific short video on that. Let's look at the next one. Let's look at the purchase ledger control account. So again, let's look at the same thing here. Let's look at what this is about. This is the purchase ledger control account. So purchasing, this is again when we buy on credit, it's purely about buying on credit, whereas the sales ledger is purely about selling on credit. On credit, we obviously incur creditors, or we create creditors, which is liabilities. We owe a supplier money. So the rule for suppliers and creditors owing money is a balance BD, large amount, which is on the credit side. So any liabilities that we have would be a credit entry. Well, that's shown there by the balance BD large amount. We've got credit purchases, that's going to increase liabilities, so it's a credit entry. Bank dishonored check in this case, if we were talking about creditors, which we are in this case, the business is paying creditors money. So who is dishonouring the check? Well, this is us as a business, our accounts we always focus on. We are sending a check to suppliers to make payment for our supplies, and unfortunately we met, for whatever reason, that check has not been able to be cashed by the supplier. So why is it a credit entry? Well, when we send the check, make payment to our suppliers, we reduce liabilities, so we debit the supplier account to show that, and therefore we would credit the cash book to show a reduction in our assets of money, cash or bank. Well, that's happened. So to show the dishonoured part means we have to then reverse that, because we stole that amount of money, and that money we've sent was never actually sent. So we therefore have to increase creditors again, and that's why we get a credit entry. Same thing for interest charged to creditors. If we have to pay more money due to interest for late payments, then that's more money owed to creditors, increase of a liability, which is a credit entry. Go over to the debit side. Again, similar things here to the opposite ledger, the debtor ledger. You can see bank and cash there. Look at the double entry. Well, we're debiting the purchase ledger because we're writing on the debit side, the left side. The bank and the cash are written there, typed there. That is they're the other accounts that we are crediting. Now I know I'm a cash book. Well, that's what it is. Bank and cash belong in the cash book. You should have done the cash book. Should have learned the cash book. Studied the cash book. But quite a lot of teaching when it's done is you do back ledgers, T's and cash T's first of all, then you do the cash book. So I mean the cash book there when I say bank and cash, but that would be a credit entry in the bank and cash because assets of money are going down. Discounts received is the second example of a cash discount, a settlement discount, but that's us as a business. Our accounts we're looking at, that's us being given or offered a discount by our suppliers. And if there's a value there, that means we've accepted that and we've paid earlier than we should, so we receive a small discount. That obviously will reduce creditors, so that's why it's debit entry. Purchase returns, so good stock that we've bought that we no longer need from the supplier, or maybe it's a faulty product, maybe it was the wrong product, but we ordered, maybe they sent too much, or for whatever reason it's stock that we've returned back to the supplier. So therefore the liability for that stock will fall because we don't owe the money for stock we give them back. And we've got the contra there. So just to prove contra goes in both the ledgers. Again, look at the other podcasts for help on contra specifically. So that's the layout you need to remember. In terms of the balance CDs, just remember mainly AQA. You need to remember the large amounts. So this would be a balance CD on the debit side for the end of the year, and balance BD would therefore come down on the credit side to show the actual balance of creditors at the start of the next period. Again, this mentioned before in the sales ledger control account, the small amounts there that they refer to is, instead of us as a business owing creditors money, when I say creditors, I mean some creditors, not all of them. If you had balance BDs, a large amount on the credit side as well as a small amount on the debit side, well, that proves the point why you have some creditors relating to the small amount value, and the majority of your creditors relate to the large amount. But how can a small amount arise? What does it mean by a small amount? Well, it's simply the opposite of what the large amount is. The large amount is you as a business owing creditors money. A balance BD small amount would be then creditors owing you as the business money. So again, it's the reversal of the sales ledger effect. But again, I'll show you another podcast relating to that one. Commonality here. Common rule here is, like you've seen before, which side affects, how does creditors affected on which side? So the debit side there is affecting creditors by reducing. So reduce creditors on the debit side, and on the debit side, I should say, and the credit side, it's an increase of creditors. So there is your rule. If you're looking for things, specific elements and items with values, think about how they affect creditors. Okay, we've got contra there as well. Don't forget, I mentioned that in another podcast. See, it goes in both accounts. I say this now because when you're doing the layout with AQA, they've asked questions before where they just ask one control account and they give you contra. So use it obviously on the correct side, but sometimes they've asked for both control accounts and they only give you contra once, which is all they need to give you, but you have to remember to use the same contra number in both accounts, and that's where some students lose that on a mark, and it works the same way in OCR. Well, I want to thank you for obviously stopping by and watching this podcast. Again, as my first podcast, my email address is there on the screen. I get a lot of requests via the student room. Obviously my member ID is AAT with the dots, and obviously you're watching me on YouTube. Thank you for watching. This is Professor Accounting. I'll see you on the next podcast.